If you're sceptical about US dollar denominated cover bonds, I get that. There have been some false dawns for the market before, and as long as Fannie and Freddie are in conservatorship, there isn't a whole lot of hope for the domestic issuance that a lot of us were wishing into existence a few years back. I think that's going to change, and now could be a great time to get up to speed on the product. But before we start, in case no one has explained the product to you before, it's a bond market with over $3 trillion equivalent outstanding. It funds 1 in 4 of the mortgages in Europe, but unlike agency paper or private label ABS, it's a fixed rate, bullet maturity product with no embedded prepayment risk and no attempt to transfer the credit risk of the mortgages to the investors. Here in Europe, when we think about fair value, our references are usually governments or supranationals rather than securitizations. My name's Richard Kemish. I'm an editorial consultant to Euromoney Conferences, and I believe that US dollar supply of cover bonds is going to take off for 4 main reasons. As part of quantitative easing, the European Central Bank has sucked up a lot of covered bond supply in recent years. Now that's over. With a run rate the equivalent of over $200 billion per year, issuers are looking to diversify their investor base as much as possible to take pressure off the euro market. Covered bonds get great regulatory treatment for investors under European Union law. There's a growing movement for that to be incorporated into the Basel rules for banks, and a clear trend for central banks outside Europe, maybe even including the Fed, to take covered bonds as collateral on favourable terms. It might be a European product at heart, but outside Europe the product is growing fast. You might have seen the Australian and Canadian issuers in dollars this year, but there are plenty of other countries around the globe that are looking at building a cover bond market. The more supply there is, the more liquidity. The more liquidity, the more investors. The more attractive the market is to issuers. We've seen that in many markets before, like the British pound covered bond market. I'm going to be discussing these points with a wide range of industry experts from the US, Canada and Europe in a whole-day conference in New York on the 14th of December. And if you don't know about cover bonds, but were afraid to ask, don't worry, we've got that covered too. We're going to be talking about the collateral, the regulation, the relative value, and we're going to be speaking to some of the biggest issuers. And the best thing about it, the conference is free for investors. If you'd like to register, visit euromoneyconferences.com to sign up.